Welcome back. I've had a few viewers request that I cover the sell portion of the dynamic investment program. I've covered the dynamic investment program in the past, but to recap, it's a simple Excel program that gives structure to a couple pretty obvious investment concepts. All else being equal, when investing in an asset, you should buy more when the price is low and less when the price goes up. Then when the price rises to a point where you're interested in selling, you should sell less when the price is relatively lower and more when it's higher. Simple, right? Buy low and sell high. This seems like a pretty obvious concept, but investors struggle with it, and one of the most accepted investing practices, dollar cost averaging, forces you to buy the same amount on a regular basis regardless of price. Before moving on to the selling guidance section, let's take a look at how you would have fared buying H-bar using the dynamic investment program versus dollar cost averaging since it started trading this past September. If you would have used the dip download out of the box with no adjustments, you would have bought nearly 194,000 H-bar for $4,800. If you would have dollar cost averaged using the same amount of money over that time, you would have ended up with only about 168,000 H-bar, 26,000 H-bar less. For a full rundown on how to use the dip purchase guidance, click on the link below to watch the instructional video. Okay, now let's get to the point of this video, the sell portion of the dynamic investment program. Obviously, you need to have a good strategy to divest from an asset, just as you need a good strategy to invest. Granted, in the case of a dividend-paying stock or cryptocurrency where you can earn staking rewards like H-bar, there may be less of a need to divest because those dividends or staking rewards may be sufficient to justify holding the asset. That said, if a specific asset's allocation becomes too large in your portfolio, it may be prudent to divest simply to properly rebalance your investments, even if it does have good passive returns. I think this will be the case for many H-bar investors. Like the purchase guidance of the dynamic investment program, the selling guidance is based off of one of the most important numbers related to your investment, your average purchase price, also known as your cost basis. This cost basis is derived from the purchase section. If you did not use the purchase section while buying, simply enter the amount you have bought here and your average purchase price here. To allow this section to appear properly, before you have sold any of what you have accumulated, there is a placeholder showing 1 unit at $1. This can be replaced when you make your first sale, but we're not there quite yet. First, set up how often you would like to sell. The dip program I am currently using for H-bar has sell frequencies set in both weeks and days depending on the price of the H-bar. Most casual investors will likely sell weekly, monthly, or quarterly. The next step is to adjust the percent of your average purchase price to set the different price points at which you would like to sell. Increase those percentages as you move down the column. Unlike the purchase guidance, which set the upper price limit to buy a corresponding amount of an asset, this will set the lower price limits over which you will sell the corresponding amount of the asset. So if you are using this program to potentially sell H-bar in the future, go ahead and set the amount of H-bar you would sell at these price points. This is where your knowledge of your investment, research, and imagination can help you try to determine where the price might go and how much you would sell if it were to ever reach those heights. It may take some experimentation playing with the percentages and the H-bar amounts to meet your goals, and again, consult your financial advisor before using. The next step is to sit back, wait, and hope the asset rises in value to enter your sell range. If it does, these values will change while you sell. After all, this is the dynamic investment program. Just as the guidance in the buying section would shift based off of your average purchase price, the selling guidance values will change upwards while you sell. Why? Simple. The first unit, H-bar in our example that you sell, is less precious than your last. Essentially, the way the program is set up, when you sell your last H-bar, these limits will be 100% higher than when you sell your first H-bar. There's old investment advice saying you don't want to try to sell the top, because selling the precise top is nearly impossible. You want to sell around the top, and that's exactly what the sell portion of the dip is designed to help you do. So let's use a crypto example from the past as inspiration to see how the dip might work in the hypothetical H-bar bull run of the early 2020s. Ripple XRP's price action in the last crypto bull run works well since it has twice the total supply of the H-bar. If you put them on par, H-bar should have twice the price of XRP. So I'm simply going to double the XRP unit price starting in 2017 to see what using the program to sell H-bar in the next bull market might look like. Now understand, when I decided to enter these numbers, I did not alter the stock dynamic investment program I had made up for the sell portion download. I just started plugging numbers in when 2 times the XRP price entered the designated sell range of about 7.4 cents. It first entered that range on April 2nd, 2017. It remained in that sell range for the remainder of that year, and every month thereafter. We've reached the end of the sell section, so I'll show you how you can continue to use the sheet. Take the total amount sold and the average sale price, and enter them in these top cells. Clear all content below and label that top row prior sales. Now continue entering your monthly sales. This works for both the sell section and the purchase section if needed. So our hypothetical dip investor bought 194,000 H-bar since open access for $4,800. And then over our hypothetical bull market peak and fall, the same investor managed to sell about 80% of their position for over $183,000. Not half bad. Remember, the dip is just an Excel program. It can become corrupted and is just a tool. If you pick the wrong asset or the fundamentals of that asset change for worse or better, continued investment or divestment needs to be reevaluated. In the case of H-bar, I abandoned the dynamic investment program this past December and January and invested more, mainly because I felt the bull case was so compelling. Since the announcement of Google as a council member, the H-bar price has drifted in and out of both my sell and buy range, so it has almost been a forced trading tool, selling high and buying low. I've been strict with the dip's use during this time and plan to remain strict going forward, but will update the program if necessary based on new information and changes in my broader investments and financial position. You can click the link below to download the program. If you like or use the program, or just enjoy the H-bar bull cases or other videos, a small H-bar tip to Hedera Wallet 1466 would be appreciated. Thanks to H-bar Price, Miles, Roland, and everyone else who have sent tips in the past. They are greatly appreciated and nothing motivates like a little H-bar. I guess it goes without saying that I'm not a developer considering I used Excel, but I believe in the method. If there are any developers out there that agree and would like to make improvements to the program, please contact me. Thanks for watching and good luck.